Welcome back. Well, it's Corporate Radar and it's time to talk jewelry, considering we are getting into the thick of festive season. And of course, there are lots of company-specific updates that have also been pouring through. So the focus continues to be on the sector. We have with us Mr. Suvankar Sen, MD and CEO of Senco Gold and Diamonds. And also we have with us Saurabh Gadgil, MD and CEO at PN Gadgil Jewellers. Gentlemen, thanks very much for joining in. Suvankar, if I could just actually, before we start talking about the sector as a whole and demand trends, etc., since we have you, and I just want to, get this out of the way, because you've done some fundraise. You're raising, I think, close to 500 crores via equity capital, QIP. So just tell us that about that first. What's the requirement? What's the need? Why do you, what is your growth plan? And then, of course, that will give us a nice segue into the overall conversation on growth expectations.
We would need it for working capital. And, every year we have plans of growing 18 to 20 stores, as we have been planning for the last 2-3 years. 8 to 10 stores will be company-owned, company-operated, and 8 to 10 stores will be franchisees. So, how do you open the stores? You get the funds either from the banks or, you get it through equity. So that is what we basically would like to use for. And, in the month of August, when we saw the duty cut happening, there was a decent increase in demand, and we could see that the consumer demand for jewelry was in a very good state. So we thought that these funds will only help in our growth and expansion and for the supply chain for working capital. So that's how we would like to look at it.
Okay, so it's largely for working capital use. And also, what is the store rollout plan as of now? I know your second quarter update hasn't come in, but in general, I mean, what's the kind of broad growth expectation you're working with for this year and the store rollout plan? Then also you had, plans to expand on the lifestyle side beyond just the pure jewelry segment. So will some of this money be used for that as well?
Yes, surely, because we've opened about 4 to 5 stores on our new brand that we've launched called Cines, which is going to focus on lab-grown diamond jewelry, leather accessories, and perfumes is something that we are launching as well. So those will be certain stores that we will open either exclusive or within the store also. We'll keep a few products. So that is there. Plus, we've in the Q1, we had opened 4 stores. In Q2, we are opening we've opened about 4-5 stores. And that's the whole thought that, throughout the year, we should be able to open about 18 odd stores. So there are many on the pipeline. The festive season is around the corner. So that's how, and in terms of growth expectations, there have been a lot of, I would say every month was kind of some event or the other happening, whether it be a duty cut, whether it be a gold moving on to all-time high. So our growth expectation would be, as we began the year with the 18 to 20% growth, but 15 to 18% growth, around 18% is what we are hoping for, because the gold price itself in value terms has gone up. So that is what is going to keep us going. So that's what, we've been looking at.
Gentlemen, good morning. Prashant here, and good to have both of you here. I mean, the segment, the jewelry retail segment is one space which markets are bullish in a pretty secular way. And Senco, of course, has been the poster boy in that sense from the smaller players list. And Mr. Gadgil, I think, you also sort of entered the space from a listed perspective. So very interesting. Just a quick word, if I can start, just to complete that point earlier, Suvankar, what is the expansion that you talked about, right? You've got 165 stores, about 100 which are company-owned. This expansion will be largely in the eastern part of the country again?
Yes. See, we've been, focusing in a manner, we need to understand where our strengths lies. And, the low-hanging fruits where the probability and possibility of a higher return on capital would be there is through East. So around 50 to 60% of our expansion will be in East, and about 25 to 30% of it will be in North India. So that's where our geographically we are focusing upon. And the remaining 10-15% will be in the Western and the Southern market. So this is where and how we would like to grow.
Okay. All right, let's get to some of the festive-related demand and what we are seeing out there on the ground. Saurabh, if I can come to you to tell us, what have you seen? I mean, this is officially we've kicked off a festive season with Navratras last week. What's demand been like and what can we expect?
The Q1 results which is announced today, and Q1 has been very positive. We have shown a great growth both in volumes, value, and impact. And I think post that the market looks to be good. Like Suvankar just mentioned, every month has been a month of highlight, and August duty cut had been seen record sales pan India. We had seen a huge jump in sales also in the month of August. September again was the month of Ganpati, a festive month, and that was the month when we got listed. So it's been a good run till now, and the next 2 months, being the month of Dussehra and Diwali, should really be the months of extremely good sale across all the stores. The price hike which has been recently seen has not been a dampener as far as demand has been concerned. I think that the old gold exchange factor could go a little up as people would prefer to use old gold as a currency to buy new jewelry. But the demand would remain strong. Festivities like Diwali have always been a highlight for the jewelry industry. Consumers not only buy it from the point of view of festivities, but it's an emotion, it's a feeling. And I think the same would be seen this year. The start for the season has been good. It's just been a 3 days of Navratri, but it's been on a positive start. And I think that the season looks good ahead.
All right. Hi, Saurav. Good morning and good to see you, Ben. Could you tell us what's the gain on the unhedged gold and what proportion of your gold is unhedged as of now, and how do you see that number changing?
Unhedged gold, is reduced drastically now because we have implemented the hedging policy. We have moved to gold metal loans. So I'll talk on detail on the Q2 update. But to summarize it, we have been moving, as mentioned in the IPO plan, to gold metal loans and MCX. So we would be around 80-85% hedged as we speak.
Got it. All right. Give us a couple of more details then. What's the revenue share from the studded segment and where do you see that number headed?
So revenue share has been 10-11% studded out of the total revenue, and that we've seen is growing at a decent rate. The aim for that is to reach, upward of 13% for this financial year. It's on track. The sales have been good. We have been adding a lot of categories also to the studded category, to the studded segment. Diamonds, precious stones have been there. We're also getting a foothold into the Kundan side, Polki side. So all this should be adding to the aim of reaching 13% plus this year in studded category.
And I think, Suvankar, you also guided earlier that you want to take up the studded share by 1 percentage point every year, right? I think that's been the guidance which you've put out. Just a quick word on the on the festive season and expectations thereof, Suvankar, for you at Senco. I think you'll have to unmute yourself, Suvankar. I think we can't still hear you.
Yeah, is it audible now? Sorry,
Yeah.
sorry.
Yeah. Yes.
So the festive season looks positive. August was a great month, but when we came to September, the first half of the September was a very good kind of a demand, but towards the second half, when the gold prices started moving up a lot, we could see that consumers had gone into a wait and watch mode. But what we are trying to do, through various schemes and offers, is taking money in advance, saying that, when the festive season, the Navratris have started and the Diwali Dhanteras time will come. So then the consumers can pay the money in advance, and then later on, whether the price becomes lower or the price at which they had booked, whichever is lower, the consumers would get the benefit of that. So we are trying to come up with various payment schemes and making it much easier for the consumers to buy. And also, one more thing we need to keep in mind is that the price is moving up. The need of the consumer is to provide and get the jewelry which is within their budget. So the bridal wedding season will start in November. So we are planning to make jewelry which is lightweight within the budget of the consumers. Then the everyday wear jewelry in diamond and gold, that is something that we are focusing upon as well, because many people look forward to the season to buy their annual jewelry purchase, whether it be for working women or their purchase for the home, traditional design or modern. So we are trying to provide all kinds of necessary variety to the consumer. And more interestingly, the men's jewelry. That is a 15% of the market that we are all focusing upon. And, Aham is the brand. So we will be launching new designs. Suddenly you realize during the festive season that men's of all ages, not only young, but even middle-aged, people, they start buying their chains and bracelets for the festive season. So we are very conscious of what all will be needed for the season, and we are providing accordingly. So that's how it is.
Got it. Suvankar, I think you'd mentioned that the lab-grown diamond is getting a lot of continuing coverage, right, in the media, especially with regards to what's happening in the diamond sector, lots of job losses and stress in that part. I think you also mentioned late September that it is taking a toll, but for the segment of diamonds that you're operating in, it's not really made much of a difference. Is that correct?
Lab-grown diamond makes a lot of sense when the size of the diamond is bigger. So any diamond sizes which is 50 cent or 1 carat and above, that's where you can see a big price difference between the natural diamond and the lab-grown diamond. But the segmented diamond jewelry that we are mostly working upon, almost 75 to 80% of our diamonds are, it's like those small diamonds that you see that is used in the jewelry, which we call it -11 or -8 sizes. So 1 cent, 2 cent, 3 cent, 4 cent. So those small sizes. So that is something which has not got affected by the lab-grown diamond jewelry. But at the same time, these lab-grown diamond jewelry is becoming like another niche segment for, say, either a destination wedding or, your fashion. Someone might have a solitaire of a, round diamond. They want various shapes, princess and pear and this and that, heart shape. So then they can try out their fashion aspiration through lab-grown diamond. So this is how that segment is kind of playing out for the consumer.
Okay. All right, gentlemen, good to have you in to discuss the trends and, of course, the growth projections, which look all very, very promising for some of the listed jewelry plays here in India. Thanks for joining in.